everyone loves to have a good scoop of ice cream, and as the summers are approaching, all the more reason to grab one. Now, for the investors in markets, a pure play ice cream company has finally listed, Quality Walls India, demerged entity of HUL. And joining me to talk more on this is Chitrang Goyal, who is the Deputy MD of Quality Walls India, and Prashant Premrajka, who is the CFO of Quality Walls India. Thank you for joining us on NDTV Profit. Sir, I want to start by asking you that, ice cream is a seasonal business and also it's capital intensive. How do you plan to keep strong ROC or the return on capital employed for the medium term?
So let me first start. Thank you so much for coming over. And I would say that let's understand the contours of growth before we move to ROCE. I think the contours of growth are very clear for our business. Number one, India as a country is currently have under penetration of ice cream, and we are one of the fastest growing, or ice cream is one of the fastest growing category as per Euromonitor. Number two, we will continue to expand a lot in our cabinet distribution at the front end. We will continue to make sure the access reaches not only the metros but tier 2, tier 3, tier 4 cities as urbanization is happening and electrification is happening. That is important. And number three is how do we drive bold innovations, because if you innovate great products, if you get more discerning products for Indian consumers, people continue to consume ice cream much more, because it's a category which comes with a lot of stretch. It's a category which can be consumed any day, any time, and hence we feel that volume growth in this category and this company is here to stay for a long term. From a business standpoint, we will continue to invest in building infrastructure, which is because we believe great products come with great responsibility of cold chain, and that's why you will see we will continue to invest in our cabinets at the front end to the retail. We will continue to build world-class cold rooms so that we service every cabinet with a great tasting product, so the consumer experience is not compromised. And that's what differentiates us, because we first quality is not only the brand name but is the ethics for how we do business.
So Riddhima, if I just were to give this color and give you some data points, ice cream is an under-penetrated category versus a 13 million total FMCG outlets. Ice cream is present only in 1 million outlet versus a carbonated soft drinks, which is between 4 to 6 million chillers. We are only again present in 1 million outlets, so huge headroom to grow. It's under-consumed, so on an average we consume 0.5 to 0.6 liters of ice cream versus 5 liters, 13 liters that you will see in many of the other cold Western countries. So it has got a huge headroom to grow. And in this backdrop, our business size is close to around 200 million, 1800 crores. Over a period of time, with the leading indicator of the category and Euromonitor forecasted growth rate, we should grow in double digits in times to come. Our material margin, which is the gross margin, is the highest in the industry. It's one of the leading material margin company in the country. Our current level of EBITDA is a reflection of the supply chain investments that we have done to strengthen the infrastructure. We have clearly identified the pillars on the basis of which our cost structures will go down and operating leverage will kick in. And as and when that happens over the planned period of time, you will see EBITDA margin improving, and you will also see subsequently ROC also improving.
So brokerages had valued the company at a discount compared to the other FMCG players. Do you see, and the listing also happened at around 29, close to 30 rupees per share. Do you see this as a structural discount due to the category of ice cream? And do you see this will improve in the coming time with scale and execution?
What I can certainly comment, Riddhima, is it's a different business. It's a business which is a much higher growth business with a huge headroom to premiumize, because 50% of the market is still unorganized. It certainly is a lower EBITDA margin versus the classic FMCG play, and which requires a higher capital intensity. For this management team, the only focus is to grow in competitive double digits and to realize the margin improvement opportunities that we have put together.
With the GST rate cuts from 18 to 5%, now ice creams will become more affordable.
Yes.
So your focus will be on volume-led growth or margins and profitability?
It is an and mindset. So if you will look at our growth algorithm, bulk work of the growth comes from volume, from distribution expansion and the innovation that we are trying to bring in, very limited price. But equally, we have to create the long-term value for our investors and shareholders. And therefore, the margin glide path that we have put together, we have very clearly identified areas where we have to cut down costs, bring in the procurement synergies, and that will aid in the EBITDA expansion over the planned period.
So you did talk about the cold storage and refrigeration, which is very important for the ice cream business. So will we see, and how much of investments will we see, and will that be more, or there'll be more free cash flows or the improved cash flows in this?
So it is true, we have to invest quite a bit in driving the distribution roadmap. So as we mentioned, ice cream is present in 1 million outlet versus carbonated soft drinks with its freezer present between 4 to 6 million outlet. So when we put in the cabinet, we deploy capex. When we have to grow in double digits, we have to put in the factories, etc. So over the next 10-year horizon, we see an opportunity and there is a headroom to grow in double digits. So we will continue to prioritize capital investment, because what is really important is to get that critical mass, continue to grow in double digits, and then the operating leverage will take care of itself. And therefore, operating cash flow is more important. Free cash flow will be a function of how much capex we put in, and that capex deployment we will continue to optimize depending on the volume outlook that we see in a subsequent year.
So for the input, commodities like your dairy, sugar, they all stay a bit volatile. How will you manage the demand while maintaining your margins?
So commodity cycles, Riddhima, are part of any businesses. So whenever the commodity cycles turns unfavorable and the cost goes up, we have got our procurement team which does hedging, long-term supplier contracts. We have got R&D team which comes in from the blend flex, ingredient flexibilities, etc. And we have got the entire price piano of products starting from 10 rupees goes all the way up to 100 rupees, and which offers consumers all the competitive products at the price point that they want to choose. And if after that there is a calibrated pricing that we need to pass on to the consumer, we do pass on those calibrated pricing to consumer.
All right, now on competition bit, in the ice cream there are many unlisted players. So what sort of impact do you see with competition? Is it the pricing, distribution, or innovation in the category?
Let me answer that. Ice cream is all about access and availability. I think the biggest job to be done for us is to go more closer to the consumer and create a product which is repeated by itself. So when we bring brands like Magnum, when we innovate in Cornetto, that gives us an advantage for the consumers because we don't compromise on the front end quality. And that's what we feel, because the category is growing. It's not about share gain right now, it's about growing the total cake, doing the total pie. As Prashant already said, that we are around 500 ml to 600 ml of consumption. Countries next door are around 3x of our size in terms of consumption. More we build the category, it's all good for the consumer at the end. In the end, what's important is consumer needs to be happy, because life tastes better with ice cream.
So after the demerger, now what will be the operational support, which you will be getting from HUL, especially in this transition year?
So we have already, there are some tech stacks and the transient support that we have already agreed with HUL, which will be running for a period of 18 to 24 months. But in terms of operational management flexibility to take decisions and to run the company, we have an independent management team. Because we are listed, we have an independent board and the committees to run the entire agenda. So the entire decision making running the businesses is on account of KWIL and its board of directors. But because we have demerged in a short while, we will be taking time to build our tech infrastructure, etc., for which there is a TSA arrangement that we have agreed with HUL.
Okay. Lastly, since it's a seasonal business, what should the market watchers look at? What key metrics should they see for the next 2 summers?
So I would say the market watchers first need to consume more ice cream and they need to see the innovations coming their way. I think that's number one. What we are guided by is the investments which we are putting should drive us a good competitive volume growth in the business, which is on a long term, which we are trading ourselves that how do we create value for the consumers and the shareholders in the next 3 to 5 years. That's what we are. From a metric point of view, we'll be disciplined in our investments by adding more cabinets, more retailers in our distribution footprint. We'll be disciplined in our supply chain costs. Where do we open factories, or where do we open warehouses, so that we can squeeze out more costs in the leverage. I think these are the 2 things which we'll be continue to guide, and how do we drive more value and at less cost in the business.
So Riddhima, we are a growth oriented business. Single most important metric is going to be growth, followed by EBITDA.
All right. Thank you so much for speaking to us.
Thank you so much.
Thank you.
Thank you.
you.
Thanks.